Switching gears now, let's dive into the markets. As we wrapped up 2023, the president of the Nebraska Pork Producers Association shared with me that producers were facing worse market conditions, even tougher than those experienced back in 1998. Those involved in the pork industry, you know how challenging those late 1990s were. But here's the good news. Conditions have been looking up over the first quarter of 2024. Earlier this week, I had the opportunity to discuss that turnaround with Iowa State University ag economist Schulz. Let's take a listen to our conversation. Well, about a week and a half or so ago, we had the hogs and pigs report come out. Let's first take a look at the nationwide numbers. What did that report tell us, Lee?
Well, I would say in general in line with expectations. Overall, we did see numbers tighten. Maybe they were a little bit on the larger side of the decline in numbers. So if anything, the report was neutral to maybe slightly bearish. But when you look at where we're at as far as the breeding herd, we continue to see some contraction there. We were down 2.1%. Farrowing numbers for December, February down 2.8%. The big shocker in the report was the productivity or pigs saved per litter. That was up 4.6%. So even though we're seeing fewer sows, fewer farrowings, we had a larger pig crop by 1.9%. And so that showed us that as we get into the summer, the hog supplies will be a little bit larger than maybe we anticipated prior to this report.
Lee, when it comes to that report, they give state-specific information. I asked you if you had a chance to look into the Nebraska numbers, and you've got some of those you can share with us today, right?
When you looked at the Nebraska numbers, they bucked a bit of that trend. So when the breeding herd was up 3.8%, sows farrowing were up 2.8%, and actually Nebraska had the third largest pig save per litter increase at 7.6%. So their pig crop was up over 10%, almost 11% year over year increase. Now, I think it's important to keep in mind we're always comparing to that base year ago level. So overall larger changes can be a bit indicative of both what it compared to a year ago, but also what the current situation is in Nebraska. So looking at this report, we did see a bit of expansion overall at those Nebraska numbers. Now, I think part of that is I think we're seeing a bit of stabilization in the supplies as we're seeing economic conditions improve.
Okay, speaking of that, as we look back at the charts over the first quarter here of 2024, things are really challenging entering the new year. Visiting with some of the Nebraska pork producers, talking about how challenging these pork conditions are raising pigs in these economic conditions just were. But that has rebounded a little bit. Talk about the factors leading to why that is.
It's certainly been a needed rebound. As we've looked since the turn of the year, we're up roughly $14 per hundredweight. And when you compare that to dollars per head, that's roughly up $25 to $30 per head, really since the beginning of the year. And that's provided a lot of optimism. I think you have to really look at being a demand-driven market. We've seen domestic demand stabilize in the fourth quarter of 2023, and I think there's been some positive signals of stronger domestic demand. Export demand has really continued to outperform maybe our expectations. So far, we're up 9% year over year in exports. USDA has us up roughly 5% for the year. So that demand has really been a supportive and especially compared it to supply. So supplies, you could argue, have actually been larger than expected. So the supply is weighing on the market. The demand has really provided that optimism and been a real driver as we look at the increase over the first 3 months or so of the year.
Well, let me ask you this, Lee. It's never good when the coffee shop chatter is how much guys are losing on pigs per head out the door when they're finishing them off. But at this point, as we have seen some of those prices rebound, are those finishing pigs, are they in a profitable territory just yet, or are they still kind of behind?
We're knocking on the door. So as we've left 2023 behind us, the worst year financially that I've ever measured when we were looking at the Iowa State estimated returns model, producers roughly losing $32 per head. Now, as we get into 2024, my model shows April is break even for the average pork producer, and then looking at possibly a string of profits as we get into May, June, July, and August, with some of the highest profitable levels being in June and July. For the year, my estimates suggest we're roughly break even. And so that has really been a significant change from 2023, but also a significant change from what we expected 2024 to look like. Earlier in the year, I had projected losses of $15 to $20 per head. Again, we're now looking at possibly break-even levels with some relatively strong profits as we get into the summer months.
Yep, pretty neat resource there. Want to get your thoughts here, big picture. We look at the industry because some of these challenging times. You penned kind of a publication, a letter out there talking about tough times could push more structural changes in the hog industry. What changes could we see on the horizon?
Well, I think it's important to separate kind of longer term trends and changes that we've seen, also with possible implications of the financial situation that producers have faced. So, for example, we've seen continued growth in contracting. So if you go back to roughly the early 2000s, we were in that about 30% of hogs were under contract production. We're over 50% today. And so that's been a longer term trend that maybe we could see continue to elevate a little bit. We've seen some growth in the percent contracted over the last several years. I wouldn't say it reduces risk, but it does change risk for both contract growers as well as integrators in the market. Another change we've seen over time is, and I'll point to the recent Census of Agriculture with where we have 2022 data, we've seen fewer farms. So depending on how you measure it, both operations with inventory or operations with sales, we're down roughly 5,000 to 8,000 operations from 2017 to 2022. Now the challenging conditions of 2023 likely did see some further contraction in the industry, but that's further much more of an ongoing trend that we've continued to see. Now as we look at more recent events and structural changes, we've seen the announcement of the plant here in Perry, Iowa, being closed permanently starting in June of this year. And so that's a change to the packing capacity. And if you look back to fall of 2021, we've seen a reduction in packing capacity of roughly 6% nationally now with the closure of several plants. So that could be an adjustment we're seeing in the industry as inventory numbers have started to peak. And we're now starting to see some contraction in packing capacity. And why I point to that is that has both implications longer term, but also implications shorter term, especially as we get into the fourth quarter of the year, and we may start to bump up against that capacity as we have larger hog supplies and a fixed level of capacity.